Tom Lee. Welcome back. It's good to see you.
Great to see you,
especially on this day. How are you? What do you make of this?
Well, markets don't like uncertainty. They like visibility. They like moats. So markets are a little scared today. To me, it's an overreaction. I mean, Nvidia decline is the worst since March 2020, and we know that ended up being a huge opportunity for investors. So I think it's not a fun day, but I'd be looking at this as an opportunity.
I've been thinking about, the people who've been coming on today of all sort of professions, whether it's a strategist or investor or whatever, analyst, defending all this or saying it's overblown. How do we know? What if it's not? And if it isn't, what does that mean?
We don't know if it's overblown. You're right. But this is the nature of technology. I'd be personally surprised if Nvidia became Betamax in the past week. I mean, that's really would be the kind of change that would be required to really justify selling Nvidia here. And given, I think, the need for AI because of global labor shortage and Nvidia chip dominance is still strong, unless a new model emerges that doesn't require GPUs entirely, I'd say that markets just generally do fire ready aim. I mean, I think it's hard to know, though.
I won't disagree with you on that. I mean, that's how the market tends to do that. But a lot of AI was sort of sold to investors on a hope and a dream, right? We haven't seen, in many cases, the ability yet to monetize all of this, or at least to have a sizable return on the investment that a lot of these hyperscalers are make tens of billions of dollars that they're pledging to spend. Doesn't that matter? I mean, what if some of that hope and dream just doesn't come to the degree that we thought, or we decide that it wasn't worth the money that we were willing to pay for it?
I mean, these are fair questions. If Nvidia was at 100 PE, I'd probably say that there's too much good news priced in, but the PE is around 30 times. I'm not sure that that's very demanding for investors.
Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks rebounded on Tuesday following a steep shock sell-off spurred by concerns of overconfidence in big tech's potential payoff from AI investments, but weighed down by Trump's tariff threats. And today's trade was the complete opposite of yesterday's trade, where we saw the big names, the Magnificent Seven names, give some back to the market yesterday. They all gained, with Nvidia up 7.55%, Microsoft up 3%. Now, Apple, an outlier, 4% today. It was up 3% yesterday, having one of the best weeks ever, I would say, up 7%. Crazy. Amazon, Tesla were both in the green, Google and Meta too. And then we had a couple of trades yesterday. For example, this section here in utilities was deep in the red. They were green yesterday, bouncing back. Same with asset management. This section was very red when financials was very green. But you could see financials was kind of mixed price action. There were winners, there were losers in financials. But yesterday, mostly winners. Same here with healthcare. And it was, again, just a rotation from what we saw yesterday. Yesterday's losers were today's winners. Today's winners were yesterday's losers. And you could see here that growth was the standout sector across the factor and size segment, with large cap growth up 2.24%, and that was on the back of Nvidia running 7% today. Large cap core also gained up 0.81%, but then a large cap value was down 0.91. So you can see that yesterday's losers was today's winners, and that was the same for mid caps and small caps across all of the factor and size segments. Only 3 sectors gained today: technology, comp services, and discretionary. These are the Magnificent Seven sectors. They have these big named stocks. Financial was only down 0.1%, materials down 0.2%, and then we saw utilities down another 1.6% today. So AI energy demand probably going to get hit. At least that's what the market is telling you. Staples was the big winner yesterday, down 1.5% today. And this is just the market telling you that there isn't a massive economic impact. This is really just like a stock market specific event that's going on. The economic data and the overall economic environment should still be favorable. And that's why we're seeing the rotation we're seeing seeing right now. Real estate, a big winner yesterday as well, was down 1.1% today. Then we also saw energy down 0.8%, industrials down 0.6%. But because of the massive move we saw here in tech, comm service, and discretionary, the S&P 500 was up today. The Nasdaq 100 was up today. For the most part, stocks did very, very well. And again, that was on the back of Nvidia, up 7.61% today, really coming off these lows, making higher highs into the close. It's the kind of stuff you want to see on a rebound. However, Nvidia has some work to do to get to that 138, 140 level it was at the end of last week. We did have some other market movers. Boeing was down 0.38%. It reported an annual loss of $12 billion in the wake of strike and key problems in the business. All in all, the market had sold the stock off readily into its earnings, and that's why it was only down 0.38%. On any other stock, if you report a $12 billion loss and it ran up into earnings, it would have been a vicious day in the market. And that is exemplified by JetBlue, down 25% today on a very disappointing first quarter. Revenue per available seat mile, that's the metric they report, came in well below analysts' expectations, and the domestic low-cost carrier also faced significantly higher costs. And this is coming on the back of a merger and acquisition with Spirit Airlines that was denied last year. Had these two companies merged, we wouldn't be in this situation right now. However, Joe Biden's administration said no to that, and this is the situation where we are, where both JetBlue and Spirit Airlines are both in the losing seat, having not merged and both facing higher costs, and now both of them probably facing bankruptcy if this trend continues. Another market mover today was General Motors, down 10%. Now, General Motors dropped their earnings. They posted a quarterly and sales beat, top line, bottom line beat, right? Guidance was actually above the street's expectation. However, the stock was down 9% on new tariff threats from Donald Trump. And these tariff threats revived worries about a trade war, which was already in focus after his standoff with Colombia over the weekend. Trump said he wants universal tariffs much bigger than what's already in place. His incoming Treasury Secretary, Scott Bessent, reportedly plans to introduce these tariffs gradually across the board. So that is why we saw a lot of market churn as a whole. We also saw the dollar strengthened and yields rise on the back of this. And that is part of the reason why we actually saw the broader market sell off. What also didn't help the broader market price action today was durable goods. Now, the data in durable goods was an actual dumpster fire. This is a little bit concerning. The consensus expectation for durable goods headline was 0.6. The forecast was 0.5. Look at what we reported, negative 2.2%. However, it does look like transport was a major factor here, because if you exclude transport, right, you get 0.3 versus 0.4 consensus. Now, we still missed on the ex-transport side, and transport is very volatile, energy prices, fuel prices, that type of stuff. However, this is still very ugly price, and that is part of the reason why we saw stock sell off today, because durable goods was a bit of a dumpster fire. Consumer confidence also came in below analyst expectations. And yeah, the economic data today, not that hot going into the FOMC meeting tomorrow. And all in all, market breadth deteriorated ever so slightly today. 3,300 decliners, 2,900 advances. However, the big names advanced, and that's why we saw the major indices up a lot. And then looking at market momentum, we continue to see much of the same from yesterday. Now, ignoring the 5-day moving average, it's very noisy. The 20-day continues to remain strong. The 50-day continues to antagonize us, and these longer-term averages remain strong. In other words, telling us that yes, while we do have short-term weakness, that is offset by the long-term trend, which continues to tell us to buy the dip. Regardless of all of the noise, the technicals right now are still very sound and telling us that, this is still an opportunity to buy. We are still in a bull market, and you're really going to have to get something from the technical side, the fundamental side, as well as the macro side to derail for this market completely upends itself. Until that day occurs, buy the dip in this market. Now, markets are about 5 minutes away from closing, and where we stand right now is the S&P 500, the Nasdaq 100, both posting positive days in excess of 1%. The Nasdaq 100 on fire, the IWM up 0.28%, but you can see the RSP, the broader market, down 0.38%. But the S&P 400 mid caps and S&P 600 small caps also posting slightly positive days. So all in all, equity seeing a very good day across the board, except in the large cap broader market, the RSP, the equal weight, down 0.44%. But that was coming off a day yesterday where it delivered extreme alpha against its peers. When the Nasdaq 100 was down 4%, the RSP was actually flat, slightly up. So net over the 2 days, the RSP is outperforming the Nasdaq 100 relatively speaking. Growth today outperformed value, and we saw yields rise on the back of the tariff threats as well as the dollar gain 0.44%. The dollar still sitting at that 107 level, but now closer to the 108 level, coming off its highs of the 110 level earlier in January. Bonds were kind of flat today, slightly down. Bitcoin fell 0.71%, but still above the 100,000 mark. And again, on the back of Trump's tariff threats, we saw gold rise 0.91%, silver up 0.74%, WTI was up 1%, and nat gas fell 4.2%. Now, let's actually go ahead and have a look at the S&P 500, where we stand and what a remarkable journey it has been. We've gone from high right to low to bouncing off these very key support levels, and this is where we are right now. We've had a pretty weak day yesterday, coming off a strong day today. Now look at this wick right here, guys. This tells us that bears really did try to take us lower. You could see here that we opened above yesterday's close. The bears then took us all the way below yesterday's close. However, the bulls came in a very big way, pushed us above today's open, and now we are sitting at the top end of the range, near the highs of the day. It looks like that's probably where we are going to close. Again, there's about 3 minutes before market closes, and if we actually just look at a one-day chart of the S&P 500, you could see this is where the bears took us right below yesterday's close. However, we sort of bought the dip, made higher highs into the close, and this is where we are right now. It's actually the type of price action you love to see in the S&P 500. Now, zooming out, and things still look largely constructive. Yes, we actually did come off the highs, as you can see right here, the core resistance, and bounce right off the gamma flip. This is constructive. I said yesterday in yesterday's video, you want to be a buyer right here, and look at where we are right now in the S&P 500. The Nasdaq 100, I say you want to retake the gamma flip zone. That's exactly what we saw, because we closed above the gamma flip zone, so we were still in positive gamma. Remember, above this yellow line, you're in positive gamma. Below this line, you're in negative gamma. In positive gamma, you want to buy dip, sell rips, and your target is the core wall, the core resistance, currently for the Nasdaq 100 at 21,915. Below, you want to target this lower end with a lot of volatility, because dealers buy to strength, sell into weakness, whereas in positive gamma, dealers buy dips, sell rips, and create this type of price action. In negative gamma, dealers create this type of price action. That's why we tend to see very volatile price action in negative gamma, very linear price action in positive gamma, as you can see from this chart right here. But the Nasdaq 100, we're still in positive gamma. And again, I said yesterday, if we do get into positive gamma, close in positive gamma, you want to take the opportunity to buy and aim for the 21,915 area. However, on a technical basis, this right here is looking like a higher low relative to this high right here. And that's not necessarily a good thing. Last time we actually had a higher low, if you actually zoom out right, was right here in this June-July period. We put in a high and we put in another higher low. And what did we see? We saw a pretty vicious sell-off, and we only retook that high like 4 or 5 months later right here at the back end of November. Again, this is the June-July period. So, if we do go ahead and put in another lower high, we could actually continue to see weakness in the Nasdaq 100 that could actually take us to a lower low unless we go ahead and break this high. So the move we're seeing right now, we need to go ahead, close this gap, break this high. That would be constructive for us to move higher and close this gap. If that is not the case, if we see weakness right here, expect lower price action in the Nasdaq 100, especially if we go ahead and retake the gamma flip zone and go into negative gamma. So we'll see how we go. The Nasdaq 100, I'm still wary of. If you're a longer term investor, you're taking this opportunity to buy. But if you're looking at the very short term, 1 quarter, 2 quarters out, going into earnings, there's a lot of things that can go wrong. And what I would rather be doing is waiting for confirmation of the price action rather than predicting where it's going to go. If you do just want to find value in the market, look at the RSP. It's acting very, very well. We're building a channel up here. I think it's going to be a very tight channel, and then we're going to break to the upside, retaking all-time highs, I think in the first or second quarter. The RSP is acting very well. And you know what's acting very well as well? The RTY. It's came right off its core resistance, right? And it's sort of like bouncing right here just above the gamma flip zone. And that probably means you want to buy the dip. Bulls are coming in a very big way. And what we want to see now is a move to the upside, break the core wall, have the core wall move up, right? And then we can target some of these higher levels. I do think small caps, mid caps, especially the S&P 600, like look very, very constructive to move higher. They look exactly like the RSP. Look at the mid cap indices, right? They're sort of like forming a base these highs right here. They fill out the space, and then we're going to make the next move onward and upward. And I think that's going to come on the back half of earnings this week as well as next week, because the majority of the S&P 500, both in numbers and market cap, report within the next 2 weeks. So we should have the majority of earnings out, and that's going to provide a tailwind considering with the earnings beats we're seeing right now in the market and the overall nominal earnings picture. All in all, guys, I think equities do look good, but the Nasdaq 100 looks a little bit shaky until we actually go ahead and retake this high right here. I'm in wait and see mode for the Nasdaq 100, but the S&P 500 looks good. The RSP looks good. RTY looks good. And if we continue to see follow through from this bounce to the upside, that's going to be very, very positive, but it really needs to be backed up by strength from the mega caps, because as you saw yesterday, if Nvidia goes down in a big way, the entire market follows it. And even if the underlying broader market is very positive, it just can't make up for the 3 trillion market cap that is Nvidia. And if Nvidia is going down, Microsoft's going down as well. So too is Google. And it's just a huge indexing effect that has an outsized impact on the market. Let's say you want to hold individual names. What do you want to hold? Now, a stock that I've championed, and that's actually up about 8% since I bought. My average buy is about here, is actually Evolution. Now, this stock was up 2% yesterday, 2% the week before, up 1.63% today. It reports its earnings, and it's at a very key level right here. The second we break this level right, onward and upward, and we can target the mid 80s, early 90s in price action, assuming earnings comes in good. I think earnings is going to be great. Now, another name that I like that was a bit of a dog today was PayPal, down 2.29%, but all PayPal is doing at the moment is sort of just basing this area right here. I think we're going to see a continued base into its earnings, and then we'll make the next move higher or lower depending on its earnings. A lot of good expectations baked into PayPal, but I believe in this management team. Another name that I actually do like, guys, that I think you should buy on weakness, my fair value is for Google is about $200, and you can see you're sort of building out this base right here. If it just continues to trade, and it'll probably just continue to move onward and upward, the next catalyst to move it to the downside or the upside will simply be its earnings. Nonetheless, I think looking long term, even if we do get a miss on earnings, you want to hold Google because it's a key technological player in the AI trade. It benefits from both the hardware side and software side. And what we really saw today, guys, something that I didn't talk about, was software names really broke out. Look at CRM, right? CRM was actually up like 3.7% today, really staging a breakout. If we actually look at a company like ServiceNow was up 2.57%. If we look at a company like HubSpot, right? The NYSE HubSpot was up 4.82%. So we really did see a ton of software names break out today. And that's simply because if AI is going to be cheaper on the power front, the GPU front, and the usage front, the beneficiaries of that are going to be software companies, and the people that's going to take it on the chin are the energy providers, utilities, and the hardware providers, stuff like Nvidia, AMD, etc. So the market really rotating from some of these bigger names into these software names, and we'll see where it takes us for 2024. For those that don't know, in my year outlook for 2025, I said AI phase 2 names, names that'll benefit from monetization of AI, is probably going to outperform this year. And names like CRM, HubSpot, and ServiceNow are included in that list. Some of these charts look really, really good. Look at HubSpot. That's a really, really great chart. You have a move to the upside, consolidation. Now we'll break up these highs. I guess you probably target like 850 in this name, but we'll see what earnings is in store for us. So all in all, guys, taking it back to the S&P 500, things look good. We're in positive gamma. You want to buy dips, sell rips, but what we really want to see now is a breakage of these highs and the core resistance moving up. That's what we want to see. If not, expect this to continue to be the resistance zone and for us to move lower in the S&P 500. The Nasdaq 100, I'm in wait and see. I want us to go ahead, break this level. That's all I'm waiting for. And then the RTY, I think you probably start accumulating, buying right here, looking for a move to the upside and breakage of these highs into earnings. Very much the same with the RSP. We're building a base out here. We're going to look for tight consolidation and then a move to the upside, breaking all-time highs. That's what I see for equities in the markets as a whole. Guys, I think this was an opportunity to buy the dip. All we need to see now is continued strength to the upside, and hopefully that's paired with a little bit of dollar weakness, yield weakness. That should help the broad market move higher. All in all, guys, I think equities look good. And I still think you want to be long risk assets into 2025. And what a turbulent January and 2025 it has been. It really has been a crazy January, all things considered, guys. And after all of the shenanigans we've seen here in the last couple of days, the market is still very firmly in the fear zone. Fear is driving the market now. We were on the precipice here of extreme fear in the fear zone just a couple of weeks ago. We actually pushed all the way into the neutral camp. We were teetering on greed up until we had the DeepSeek situation over the weekend. We moved all the way back into this fear zone. Again, that was on the back of the mega caps moving lower, Nvidia falling yesterday, all of the semi names, AVGO, Google, Microsoft. And as a result, fear right now is driving the market, because the truth is the market simply doesn't have earnings visibility, particularly with Nvidia. And that is why Nvidia was the stock with the biggest single drop in market cap ever. Nvidia lost $589 billion. It had a 15% slide yesterday, guys. And look what was number two. Nvidia, $279 billion slide. This is the biggest single day market cap losses. And look at the top spot in every single scenario here. It's Nvidia number 1 and 2, Nvidia 4, 5, 6, 8, 9, and 10. And this was all done in 2024. And then one year in 2025. So Nvidia has really driven the market to the upside and the downside. And guys, with everything we've seen, the reason why we've seen this type of volatility is because DeepSeek, right? They developed a powerful and cost-effective AI model that rivals top-tier models like ChatGPT. Now, this breakthrough is particularly affecting Nvidia as investors fear reduced demand for expensive AI chips. And the truth of the matter is, I've looked into this. I've seen a lot of analyst notes, and nobody knows what's actually going to come out of this. When you look at the aggregate of all of the analysts' reactions, most of them see the move we saw in Nvidia yesterday, this huge move, as overblown. DeepSeek's success doesn't necessarily spell doom for Nvidia. As the AI industry continues to grow and evolve, many experts view this dip as just a buying opportunity, expecting the tech sector to rebound because they believe the long-term outlook for AI remains strong. However, I think it's better to probably buy Nvidia on strength rather than bottom ticket, because, if you think a stock can't go any lower, it most definitely can, especially when you look at some of these high-flying tech stocks. Nonetheless, we are in the situation where we are right now, and we need to look to the future. Now, what can we expect in the S&P 500 in the month of February with regards to the price action we've just had in the last month, 2 months, and maybe even the last quarter? And this is the S&P 500 performance in February under 3 different categories. And generally, February's characteristic trait is that she has a tendency to be true to the trend. In other words, if January was a solid month, so too will February. And if January was a sideways month, that will be February's gain as well. And you could see that in the trailing quarter, we have 2 scenarios: lower than 2%, right, 2 to 7.25%, and then above 7.25%. For 2024, 2025, in the last trailing quarter, we've seen 6.94% growth in that quarter. In other words, this is where we are right now. And in the month of February, we can expect average returns of 0.31%. So generally muted returns for a generally muted quarter, all things considered. So don't expect February to be blockbuster, but do expect ups and downs with a lean to the bullish side. Now, earnings, guys, earnings has been very good. We are literally entering tomorrow and the day after tomorrow, and for the rest of this week, we are entering into mega cap earnings. Apple's reporting, Meta's reporting, ASML's reporting, big names are reporting. And so far, what we've seen is the biggest alpha of beats since the second quarter 2029. There's a 670 basis point spread between the beat and misses, the third highest since 2001, guys. So earnings season looking very solid. If you're beating on earnings, you're seeing a very positive move in your stock. If you're missing on earnings, however, you're seeing a pretty negative move. So very bifurcated. The market is picking a side and going with it. In other words, the market is saying to the management teams, show me the money. Now, With regards to earnings, we do know that earnings is reporting at about 10.7% so far, double-digit growth, beating analyst expectations slightly, and what we are expecting for margins is 12.1% growth, so slightly lower than what we've seen in the previous 2 quarters. However, still very robust margins, and we should see this improve sequentially into the rest of 2025. However, despite everything we've seen in the market, guys, the S&P 500 excluding tech hit an all-time high. And when you bring it back to the fundamentals as well as the technicals, X-Tech hit an all-time high. You love to see that. The S&P 500 as a whole came off its highs, but this is very, very positive momentum. Paired with some of the fundamentals we just went over, earnings looking really, really good, margins looking very robust. We should continue to see the broader market, especially in the mid-cap space and maybe even the smaller cap space. We should see a continued broadening out and outperformance in these names for the rest of the year. This right here, new all-time highs. There's nothing more bullish than that. And that was literally made on the 27th of January, guys. So we made new all-time highs in S&P 500 X Tech and expect more of the same because we do know that the macro environment is very, very solid now. This right here is Goldman Sachs survey-based activity indicator. It picked up since the election, strengthening the case for GDP growth to remain strong in 2025. In other words, manufacturing output looking really, really good, which means GDP should remain rather robust. They actually see a 2.7% GDP for the full year 2025. You love to see that. And guys, another indicator that the consumer is not just hanging in there, but thriving is federal employment tax receipts. Now, we saw 11.3% gain in the month of January. That is insane. The biggest month ever. And we've just gone from strength to strength. And in other words, when you have tax receipts this high, you know employee compensation and disposable income as a result is going to be high as well. This gives the consumer buying power to continue to spend and spend incrementally more. This is the type of stuff you want to see in a thriving economy and a bull market. And also, guys, Goldman Sachs came out and said the market is way too bearish for rate cuts. Now, Goldman Sachs expect 2 cuts this year, 1 cut next year of 25 basis points. And while it's hard to know the exact timing of future cuts, Goldman have conviction that the market pricing is a little bit too hawkish right now. In other words, that means upside for stocks if yields come down and we get more cuts than is anticipated right now. And if we also look at the market implied probability of a rate hike in the next 12 months, we're sitting at about a 27% chance of a rate hike. That's what the market is pricing in. And simply speaking, Goldman Sachs believe that rate hike probabilities are too high, the market risks are exaggerated, and they believe that inflation will continue to tick down because the impact of the administration's new policies won't be as inflation intensive as most people expect. Now, looking at earnings for the rest of the week, guys, we really did kick it off here on Tuesday. We had a pretty big day. However, it gets even bigger this week. Tomorrow before the open, we have ASML, Progressive, T-Mobile, ADP, Danaher, Teva, and General Dynamics. Also, Nasdaq is reporting. And after the close, we have Tesla, Meta, Microsoft. Guys, huge day tomorrow for earnings after the close. That's really it. That's all you need to know. But we also have IBM, Lam Research, ByteDance, ServiceNow, Celestica, Wolfspeed, Western Digital. It's a blockbuster earnings after the close, and it gets even bigger on Thursday, but we'll talk about that in tomorrow's video. To cap things off with earnings, we also get the Fed's interest rate decision as well as the press conference. All eyes will be on that. The consensus is for a pause, but what's going to be more important is the rhetoric around the Fed and how they view the economy. Long story short, if they come out even slightly dovish tomorrow, I think yields are going to move lower and markets are going to rip as a result. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.